Hey there, welcome back to our channel, Finance Experts. After a large number of videos related to different topics like investments and different methods, ways to increase the returns of those investment methods, and pros and cons of involving in such investments, today, through this video, we are going to discuss real estate, how to manage real estate, and also the pros and cons of having real estate assets. As you know by now, the entire investment risk is decreased by adding diversification to your investment strategy by including real estate as an asset category. To this, a variety of real estate investing options are available. Real Estate Investment Trust, or REITs, are one alternative that may be categorized as owning dividend-paying stocks. Others, like investing in and holding onto rental assets for earnings as well as capital growth, are required for active participation and a good deal of expertise to be effective. We have mostly discovered that aggressive real estate trading produces significantly superior outcomes than more passive ones. In addition, let's be honest, possessing and making money from real estate is a lot more enjoyable than holding shares of a business on paper. Adding a real estate to your financial portfolio offers advantages and disadvantages just like any other investment. To help you determine if real estate investment is good for you, I'm going to discuss its advantages and disadvantages. Do you know how to determine whether real estate is a safe investment method? Investments in real estate have the potential to generate enormous money. However, it may also knock out an investor's savings and leave them facing a mountain of debt. Real estate investment has risk, just like any other sort of investment. Because of this, it's crucial to consider all sides and assess the benefits and drawbacks before choosing whether investing in real estate is a suitable idea for you. Let us consider some of the pros of investing in real estate. The first advantage of investing in real estate will be the ability to build investments with a leverage. Real estate differs from other forms of investing in a number of ways, including the ability to be purchased with other people's money. Investors can finance an individual property or a portfolio of properties for a small portion of the overall cost by borrowing money from another person. Stocks as well as bonds, however, do not provide this advantage. For example, suppose you wish to spend $10,000 on a rental property. You're only required to put down 20% or $2,000 with financing with closing expenses. Additionally, property investors may employ the capital they have invested in their existing rental properties to finance renovations as well as upgrades and even for the purchasing of other properties. These investments allow the flow of cash and passive earnings. Real estate is considered to be a smart long-term investment method. However, this does not automatically imply that a property will not start to generate cash flow in the near future. Receiving monthly passive revenue from rentals is entirely feasible after the property is occupied by landlords. Calculating the cost is the first step to purchasing a piece of property that can generate a profit. Take steps to analyze and calculate each linked cost and expense, which includes the mortgage payment, with great care. Look at the typical rental cost at present for houses like yours, so that it can help you determine how much rent you may reasonably charge renters. Investing in real estate brings more control as well as stability. Everybody who has placed money in the stock market in the past is aware that there may be daily fluctuations. The market for stocks is considerably more volatile since it is influenced by a variety of different monetary factors as well as changing marketplaces. The real estate market, on the opposite hand, has become less vulnerable to large changes. Additionally, as a real estate represents a long-term investment, temporary market downturns are not going to have a large impact on those properties' total profit. A good example of how real estate is more stable than the stock markets is the COVID-19 pandemic situation. At that time, market for shares sunk suddenly and several other companies and sectors followed as well. But on the other hand, the real estate market was relatively unaffected largely by this situation. Diversity of investments will reduce the risk. Diversification is a console among the fundamental concepts of investment. A well-rounded portfolio, which should contain a mix of assets from various industries, is essential for reducing the total risk. The value of real estate is not immediately influenced by changes in the underlying stock market. Therefore, combining both estate plans is a wonderful method to reduce your risk. Real estate investments, like other kinds of investments, include certain risks. Although specific bonds as well as CDs are essential risk-free investments, their yields are relatively low. Let's examine the potential drawbacks before deciding if investing in real estate is a smart idea or not. Now let's consider some of those characteristics. Investments in real estate require a sum of cash. Although purchasing real assets make it simpler to purchase an investment property, you are going to still need a significant amount of capital up ahead. You might require a sufficient amount of cash for the down payment, basic repairs, improvements, as well as maintenance to the property before you should consider entering the real estate market. Don't forget to include recurring costs like insurance, property taxes, as well as payments on mortgages. That can be excessive funds to invest in just one property for many people. You should require to stay for long for the returns. Purchasing a rental property is often an investment for the foreseeable future. Real estate may not be your greatest option if you're seeking speedy returns or the ability to obtain cash as soon as possible. As I have previously mentioned, it is feasible to begin realizing returns in the type of rental revenue as soon as possible. However, it's not all that usual for rental properties to experience significant growth quickly. There are approaches for investing in temporary real estate, but they are typically more challenging to carry out efficiently, particularly for first-time investors. These short-term tactics have particular dangers and difficulties by default nature. Over-leveraging of costs. Taking on too much debt is a frequent error that numerous real estate investors make. When an investor overborrows or carries too much debt in relation to the cash flow plus equity of a property, this is known as over-leveraged. Individuals who own property are still liable for maintaining their mortgage payments, including the recurring costs, even if the rental market declines. Long-term overly leveraged investors put themselves at risk of extremely enormous losses. It's crucial for preventing taking on too much debt and to maintain a substantial emergency fund to help reduce the danger. Some tax benefits might not be available to you. You might not be able to take advantage of all of the property tax benefits according to your yearly income, because high net worth owners are taxed at a higher rate, which restricts the number of deductions that they may claim. Always consult with a CPA prior to investing to ensure you are aware of all the possible discounts. Also, there is only a limited exit methods. Real estate constitutes one of the few liquid assets available, since it takes time, as well as cash, to sell an investment property. The expenses plus transactions expenses associated with selling a house could go up, and in the event you receive a cash offer, the financing process might take some time. There may be the possibility that the market as a whole will be weak once you choose to sell, which will make it more difficult to do therefore at least at the selling price that you want. Owning a house you are unable to sell and which doesn't bring in money is a risky move that could rapidly drain your savings. After considering all these points, make your proper decision to invest in real estate or even not to invest in real estate. We hope that our audience has received a very good understanding of why you should invest in real estate, the pros and cons of utilizing your wealth in real estate, and also you have received the final understanding of what type of investment method you should focus in to upgrade and increase the return from your investment. Thanks for being to the end of the video. Don't forget to like, share, subscribe, and tell us what you think about this video below in the comment section. Thanks for watching, and we'll see you in the next video.